Hello everyone, this is Brian with Unearned Inc. again. We have a real special session today that we're going to do. We don't do this too often, but we're actually going to go inside one of the applications that I use for generating passive income. Some of you may or may not be familiar with this one, but this is called Groundfloor. You can get there to their website by going to groundfloor.us or groundfloor.com. I think they bought out. They used to be .us and they switched over to .com a while ago. But what's really nice about this particular platform, if you've been on our knowledge base, our library for Unearned Inc., we talk a lot about real estate, obviously, as a passive income stream. And we talk about crowdfunding, and you'll see some of our articles related to crowdfunding, which really crosses over into real estate, because Groundfloor is an example where you can invest in real estate and, not to put a bad term on it, but I call it, push button real estate investing, right? You can sit at home and essentially look at properties and invest in properties without leaving your chair. Quite different than the traditional way of, getting in your car, touring a neighborhood, looking at, investment properties that are pretty much in need of a lot of work, and then getting a 5% down, 10% down, 20% down mortgage and going through all of that. So one of the things we really like about Groundfloor is that if you want to start getting familiar with real estate investing online, maybe you just don't have the time, the skill to do it in the real world, so to speak. And so this is a great option. We like to say here, if you've watched our other videos or read some of our articles, we're really looking for passive income streams that you can do anywhere in the world. So this kind of fits that model perfectly, because I can be on a beach, in Costa Rica and check my Groundfloor investments and be in different types of properties that Groundfloor offers on their platform. We'll get into a little bit about that, but if you're into like new home construction, I'm a big fan of new home construction. We have a video out on YouTube that talks about the benefits as a passive investor of investing in new home construction. You can actually just, tailor your investment decisions to new home construction. They have refinances, rehabs, those types of properties that are all on Groundfloor, and they're even getting into other types of investments through their labs program, where we may do a separate video just about their labs program that gives you some additional options for real estate investing. So we'll jump into this right here in a minute. Just this is what their homepage of their website looks like. They do offer an app on Google Play and for iPhone in the Apple Store. I will say the apps are more for checking on your investments. I think when you're doing research, you certainly want to be at a desktop, full computer, full screen open. And I'm going to take you through what I do. Again, this is just my personal way of how I evaluate the different investments they offer. And frankly, it's a lot harder to do it on phone. At least I feel, if you talk to maybe the younger generation or my son, they like doing everything on the mobile phone. I still like using the desktop for some of these more in-depth research exercises that I may go through. So let's jump right in. I'm going to log in and then we'll get started. All right, so you are looking at the Groundfloor main screen, the dashboard, and when you come into the program, the platform, this is not actually the main screen. You have a nice dashboard with all your metrics and things like that. But what I've tailored it to is if you go up here to this top part where it says invest, that's essentially which takes you to this screen. And so what you'll notice is when you first come in to look at the available investments, these are what they offer. It's listed in basically ascending order, where the deals or properties that are going to expire the soonest will be listed at the top, and then you can scroll down. Now, they recently made some changes where all their new releases are kind of in one table. So most of these, when I'm going in right now, all of them say 29 days. But as you scroll down, you'll see they have ones that say closing soon. So now they've broken these out, but these are all still 2 days and then they have ones that are actually in funding. And you'll notice here the soonest one is in 8 days, and then it just kind of goes up to 9, 15. So it just kind of ascends up the ladder in terms of the time here. Normally, if you're really into this, you should be looking at this on a weekly basis of what deals are coming out, and that's what I tend to do. So something to keep in mind as you're thinking about this. Do you want to make Groundfloor a major part of your investment strategy? I really like the platform. Like I've said, I've had some good luck with it, and you can see with some of the rates that you will get by doing this. So how do I use the platform? How do I evaluate a deal? That's really what I wanted to focus on in this particular presentation. And I'm just going to go through a couple of the things that I do when I jump in here. So the first thing I look at is, it's nice to see what's closing soon in case you missed the deal or you didn't get an email. They send out an email, I think weekly, all the time, where you can see, hey, new loans are funding, or we have some new releases, so you can catch things as soon as they come out. I typically just maybe go in, like I said, once or twice a week. So I don't immediately look at the email and jump into the platform. I may wait a couple of days. You'll notice that at least right now, there's enough volume, there's enough deals for everyone. So it's not like a thing where, oh my God, there's like this great deal offering 20% and it's gone in 5 minutes. So you don't have to worry about, there are some deals that go rather fast, but even the ones that go pretty fast, you may have a few hours to get into that deal if you want to be part of that deal. So that's one of the things I really like about the platform. It's not this thing where you have to be glued to your screen in order to get some really good deals that come through. What I like to do is I will filter or sort rather by remaining term. And this one is showing the remaining term 2.8 months, and then it just goes up the ladder. I click this twice so that I can see the ones with the longest term that is remaining. And it's worth spending a little bit of time just talking about this. I'm going to just kind of scroll down and see one that's fairly easy to explain from a mathematical standpoint. And I'll tell you what that means in a minute here. So let's look at this project here, this deal here, 417 Old Jennings Road. It's an A property. We'll talk about what that means in a minute here. But you're noticing that it's giving a 10% return, right? So 10% return on your money, and the remaining term is 5.9 months. So one of the most important things to know, if you forget or remember anything about this presentation, is think about what's the rate of return that you're going to get on your money and what's the remaining term. So this one is saying 10%, but all these rates of return are annualized, right? So that's kind of an APY, an annual return basis, that if you were in this deal, you would get 10% of your money. So imagine if you put $100 into this deal, and you'll notice a nice thing about Groundfloor, if you go over to the right-hand side here, it's only a minimum of $10. So you literally could go project by project and say, I want to put $50 in this one, $100 in this one. Again, this is not my only vehicle for passive income. So I tend to stick around to the, anything as low as 50, as high as maybe 200, 500. There are some deals that I've done 1,000, but that's usually on more specialized projects, like some of their labs offerings. And like I said, we can talk about that in a separate video. But there are people, I attended they had a recent quarterly call for their shareholders. You have people with their retirement accounts in Groundfloor, people with $100,000, $200,000 in Groundfloor investments. And so when you're at that level, you pretty much are probably putting in maybe $5,000 in a particular deal. Again, diversity is the name of the game. So you always want to look at it from not putting all your eggs in one basket. And if a particular deal does foreclose, and I will show you that deals do foreclose, there are cases where, for whatever reasons, I think there's been 1 or 2 cases where there was some fraud involved, and the guys took the money and ran, and obviously Groundfloor had to go through the foreclosure proceedings, but then you're paying the cost of the lawyers and all those things. And so it's not always every case that you recover 100% of your money. Even when you do, again, you have to pay back court fees and all the other things that you have to go through. So There are cases where a deal goes bad for whatever reason, and so that's another reason why you want to have a diverse set of selections when you're looking at this. Just don't go to, let's pick the highest 11.5, and I'm going to go put all my money, my retirement savings in that particular deal. That's absolutely what you do not want to do when looking at Groundfloor, any investment, any real estate investment for that matter. But my point on this one, 417 Old Jennings Road. So imagine we put $100 in this. It's saying, oh, I'm going to get a 10% return. So when this project is finished, if I put $100 in, $10 is 10%. I should get $110 back, right? I should get my original 100 plus an additional $10 for the 10% gain. The thing here is to remember is because this is annualized, you're always going to look at the remaining term to say, well, this project is already in play. A lot of times Groundfloor is already front running or front loading the money to that particular investor that is renovating the project. This is a purchase and renovation. And so there's only 5.9 months left on the deal. So you're coming into it, you're funding money to basically Groundfloor. Groundfloor is writing you an LRO, and we could talk about that later, but essentially it's basically saying I have shares in this particular real estate investment deal, not shares in the traditional sense, but it's a way they kind of work it for crowdfunding sites so that you can participate in these residential offerings, right? But there's only 5.9 months left on this particular deal. So imagine you put in $100 today, you wait 5.9 months, when in say roughly 6 months. In 6 months, you're not going to get money in your account for $110. It's actually going to be slightly less than $110. It'll probably be like $104, something like that, that you would actually get because it's only 6 months left. The only way you would get the full 10% or the full $10 in my example is if you say you had this deal and then you found another deal that was another 5.9 months and you invested that money for an equal 10%, then over the course of the year, annualized, you would get $110. But just keep that in mind when you're looking at these deals. If I were to put $100 in this today, wait 6 months, I'm not getting $110 back. I'm going to get something like $104. So you want to do that kind of math in your head, or even on paper. You can look at these and they go all over the map. So this is kind of a deal that's nice where it's a little bit easier math. It's slightly over a year. It's 12.9 months. I'm getting a rate of 10.5. So in this particular case, this is one because the remaining term is about a year. I'm going to get pretty much 10.5% if I held my money for the full 12 months. So again, if I put in $100, I'd probably get 110, 111, because again, it's slightly over 10% and the remaining term is slightly over. So I would get over $110 back on this particular deal. I tend, again, just for simplicity, I like to look at the deals, and this is why I sorted this, filtered this by remaining term. I like to look at the deals on an annual basis. I like the projects that are in that 12-month range. There are cases where, it's a really good rate. I mean, like this one, it's in Marietta, Georgia. If you don't know Marietta and it's new construction, which I love, I can do this deal, but I have to remember if I do this deal, I'm going to be out of this deal in 3 months, right? So I'm not going to get a full $12 on $100 put in. I'm not going to get a full $12 back, right? It's going to be in and out. And I will tell you a little trick on new construction. A lot of these deals, as soon as they can put this on the market, they may even have this on the market already with a for sale sign, even if it's not fully finished. And as soon as the construction is done, they're selling this house. So this 2.8, in reality, you may get an email from Groundfloor saying, oh, the deal's complete. We're giving you your money back, and it's done in a month and a half. And so you're not getting anywhere near $12 back on that deal. But you may say, hey, I want to just turn around, flip my money really quickly in less than 3 months. And Marietta is a really nice area of Georgia, kind of a suburb of Atlanta that's up and coming. Lots of, Fortune 500 companies, people that work for Fortune 500 companies live in Marietta. Lots of, growth and population growth and job growth in that area. So you may say this is a pretty safe investment. I'm going to get 12%. But again, it's just going to flip very quickly. In a month and a half, 2 months, I'm not getting that full 12% if I do that deal. So that's how I tend to look at these. just something to keep in mind when you're going through this. So I'm going to look at this one right here. This 12.9 months, 10.5%. It's in Atlanta. It could be a potential deal. Just one word I mentioned what this is earlier, just to give a little bit more detail. So obviously you're seeing the letters next to each of these residential properties. An A property is going to be, right, it's in a good area. We think the numbers look really good on this. There's a high probability that you should get your money back, right? Your return back. And so obviously, like anything in life, there is no free lunch. So if it's an A-listed property, you're probably going to have a lower rate. You're going to have a lower rate, and because of that lower rate, you're not going to make as much money. On a D property, you're going to have a little bit more risk, or a lot more risk compared to an A. This one's in Port Charlotte, Florida. It's rated D, and you're getting 11.5% on your money on this one. Again, but this one slightly less than a year. So on a $100 investment, you're not getting a full $11 back. It's going to be slightly less, obviously, than that on what your return is. But it's a D property, so you're going to get 11.5 compared to a 10.5 or 10.5 on this. I'm a little surprised that it's only a 1 percentage point difference on these properties. There's times when I come in here and a D property is like 13%, 14%, and these are a lot lower. But I think with the interest rates where they are, with things changing, you're seeing a lot tighter spread between these A properties and D properties, or in this case, a B property and a D property. But things change. I imagine if the Fed comes in and we see, these changes in rates that everyone's hoping for, you may start to see some of these rates come down, and then obviously adjust your investments appropriately in those scenarios. So that's how the A through D ratings go. And when we click into one, we can talk a little bit more about that. The other thing to keep in mind, which you really can't see, I mean, you can see it from the screen, but I want to talk a little bit more about it, is when you see the listings, they give you the street address, they give you the city and state that they are in. I wish Groundfloor, and if they're watching this video, I've asked for them to, they did a great blog post, it's probably over a year now at one point, on the difference between judicial and non-judicial states. And this gets into foreclosure in terms of, if a deal goes bad, how easy is it to get that property into the foreclosure process and try to recover some of your money by saying, okay, here's where the property is at, the current state, and we're going to try to either finish this property, or really what happens is the bank just immediately tries to flip it and see if they can recover their money by putting it back on the market. And so depending on if a city is in a judicial or non-judicial state, it makes it harder or easier on that foreclosure process. And so for me personally, I tend to avoid certain states where it's a little bit harder to kind of go through that process. Now, Groundfloor is based out of Atlanta. The company grew. They have a lot of deals in Atlanta because that's their home base. So I love looking at the Atlanta properties, the Atlanta, Georgia property. They have properties all over Georgia, but there is a concentration more in Atlanta. And so I tend to favor, again, when I'm scanning down, going from highest to lowest in terms of remaining term, I'm like, oh, I like Atlanta. Texas is another one that I've done in the past. Here's another Marietta. Florida, Jacksonville. I like Florida properties. I tend to do Florida investments. Again, it's just an easy state from a real estate investing standpoint to participate in. States that I don't do, Pennsylvania, I've done 1 or 2 deals there. They haven't worked out. I think Pennsylvania, I can't remember if they're judicial or non-judicial, but that's one of the areas, like in general on the East Coast, and I'm not saying all the ones on the East Coast are bad to do. Just again, my personal preference, I tend to pick the ones in the southern states. So this is one, even though it's a B property, 10.5. I just personally don't like doing the ones over there. I don't do ones in Illinois and Chicago area. There's been a couple of those. Even Virginia, this is new construction. I probably wouldn't look at that. I may come back to that one and see. I like Tennessee. I like Georgia. Again, these are all personal. I've done a couple in North Carolina. as well. Gatlinburg is a really popular area for tourists, so this is a particularly good deal. One thing, I shouldn't say a good deal, but a good area if you want to do research on in terms of investment properties. One thing, last thing to think about when you're looking at these addresses here, you'll see these numbers that say number 2, number 3, number 6. A lot of these deals are several hundreds of thousands of dollars in loans. And so depending on how the investor is taking the money out, like what's called a draw, the first draw, second draw, third draw, they'll have, like number 2 would mean this is probably a loan for that second draw because they're at a certain phase in the renovation where they need to take that second draw to finish the property. So just nothing to be concerned about. I mean, this one I know has been out there for a while. I think I did an investment in this one a while back, but it wasn't on number 6. It was probably one of the earlier draws, and I believe I got my money, or the loan is performing currently, which obviously is what you love to see, is that your loans are performing. Most of these are deferred. So when you look over here and you see deferred, essentially means, you're getting 10% of your money back. You're not going to get any of that money back until the very end of the project, or and not the project per se, but this particular phase or draw is when you would get your money back. So in this case, if it's saying 10 months, roughly between 10 to 12 months, sometimes they do go over a little bit by a couple of months. So let's say, safe to say, within a year, I should be getting my 10% back on this particular property, worst case scenario. You have 480 investors in this one. Loan amount is $90,000. Again, this $90,000 doesn't cover the entire project, and that's why there's multiple draws on this particular one. There's 29 days before this one closes, and there's remaining, because this one just opened up, most of the time they're going to be under 30 days. So this one just opened up not too long ago, and it's they're trying to collect 73 left of the 90,000 that was originally part of the deal. So anyway, I know I got off topic there on the Tennessee, but I do like the Gatlinburg area. On this Atlanta one, so what we're going to do is we'll click into this one, and so you can see kind of how I think about what I'm looking for. It is push button real estate, but at the same time, don't get lazy and just say, oh, I like this one, and $50 here, $100 there, $10 there. I do go through a level of due diligence to the best of my ability. Again, my personal way of how I do it. You may find other techniques that work really well for you. And so again, please share that in the comments. If you're a part of our gold or silver membership and you go to our library, unearnedinc.com, put comments in some of our articles about what you think about Groundfloor and how you're using it as part of your passive income investment strategy. But really good platform, and I like the ability where I have more control over picking what deal. There's a couple other ones out there. I won't mention those names in this particular video, but there's some where it's like, oh, I can invest $500, but then they take your money and they've already chosen the real estate deals that they're going to put it in. So you don't have a lot of control in those particular crowdfunding platforms that, put your money in a basket of deals. Groundfloor does give you that ability, right? Where you may say, hey, I live right across the street. I'm in Gatlinburg, Tennessee. I live right across the street from this deal. I know with a high degree of confidence that this deal is going to be successful. You may say, I'm going to go put $50,000 of my money in this particular deal. So I think because you have access to the address, because you have access to actually, and again, I am not advocating, and I think Groundfloor would say this as well, do not get in your car and try to drive to these locations. I'm sure people have done that to see kind of what they're looking at, but most investors are not going to appreciate, and the construction crew appreciating having hundreds of people drive up to the property and start inspecting the property on their own. But again, you want to do some level of due diligence. You can do it all by the computer. That's what we're about, doing some of this on your phone or by computer. And that's the true meaning in our terms of generating passive income without having to go do your own deal, go find your own contractors, and do this real estate investment the traditional way. All right, so we've clicked into 1378 Metropolitan Ave in Atlanta. Looks like a fairly new construction. I think this is a new construction home. But again, it's interesting that what's nice about Groundfloor, we're talking about this from a passive investor standpoint. If you do find a deal where it's like, hey, I want to pick up the hammer, or I have a construction crew and I want to start renovating my own homes, you can actually go to groundfloor.com and apply for a Groundfloor loan, and you can be in the process that way if you want to be a little bit more hands-on with your real estate investments. And people do that all the time. So a lot of times, Groundfloor is fronting that money up, already. It's up front. They're already fronting that money. And so by the time it gets to us from a passive investor standpoint, you can see this home is almost completely done. But again, they've already put in a rate of 10.5, 21 months. I can tell you just by this picture, you're not going to be in this deal 21 months. You're just not. And I think what we saw in the previous example, it was like, maybe was it 13 months left? I can go back. 12.9. I don't even think you're going to be in this deal 12.9 months, to be honest. But in any event, if you say, hey, it's a B deal, my monies should be fairly safe, and I'm still getting a 10.5% rate, which is more than I'm getting in a high yield savings account. It's more than I'm getting at least in the stock investments that you may be in, which may be a little bit more conservative. Maybe you're doing some dividend reinvestment plays and you're not getting as high a return. Always think about that, and I bring this up in every single video. When you're thinking about passive investing, right, it's always look at the opportunity cost. If I can get 5% from a high yield savings account and essentially assume zero risk, there's risk with everything, but virtually zero risk with putting my money in the bank in a high yield savings account. I think like right now, American Express, Ally, some of these are in like the 4.5% range for a high yield savings account. Then every other investment you should be doing should be more than 4.5%, right? At least in today's rate. So always look at that of why go through all the hassle of doing this research, pulling up the maps, reading all this information, only to get 3%, 4%, right? It makes absolutely no sense. So when you're doing these deals, you want to make sure you're getting a nice, healthy return. Otherwise, just put your money in the high yield savings, get your 5%, and know that you never have to worry about the deal going south. So this particular deal, before I get to that, one thing, this is another shout out to Groundfloor. I really wish they would put, you don't have the ability to search by the principal or the investor in the deal. If you know anything about real estate, take this with you, is you invest in the person, not so much the deal, right? If I know Christy Castellan is really good, like 99% of her deals always have no problems, I would rather search for Christy deals all day long because she knows what she's doing, she's experienced, but Groundfloor doesn't allow you to do that. Vice versa, I've been in plenty of deals on Groundfloor that have gone sour. I hope those people are banned from the platform, or not necessarily banned, but at least in a position where, hey, if this person has had some trouble in the past, I would like to know that, or have an ability to search within Groundfloor on what is their success rate. And today, Groundfloor doesn't allow you to do that. So you have their information. Castellan Homes, you can kind of go do a Google search and see if you can find anything about them. But it's a little bit more, it's a couple of more steps if you want to really find out more about some of these investors. And a lot of times when I've looked up some of these people, a lot of them don't have websites. It's kind of LLCs and private companies. They're doing these deals more for legal protection, but you're not going to find a whole bunch of information on them. Unless they're really big and they're not shy about what they do, you will on occasion find a lot of information about the individual or their company. So after repair value is $675, total project cost $526 is what they're putting into this deal to get $148,000. Skin in the game $96,000. You're always going to want to look at when we go back here on this particular project, right? So the ARV is 63%. Of ARV. You always want to have the lower the number, the better, because what that means is I'm having to put in a little bit of money to get a really big return, right? So if you see something, 70% is good. If you see something like 80%, 90% to ARV, that means the investor's having to put a lot of their money, into that project for very little return. So the lower the better. Like this one was a 52% ARV, But again, there may be some other reasons why you wouldn't want to do that. So I tend to stay in that, anywhere from 60 to 75 tends to have worked in the past, and that's kind of the area I play in. Again, that's only one factor you look at. The other factor I look at, and this is where we get into my due diligence and the research, it's 675. I tend to be in that sweet spot of, hey, we know the average home price in the United States is in, and I'm making this number up, but I think the last time it may be in the range 400,000, and that may be plus or minus 50,000. I tend to stay away from the deals. There's deals in here that are 1.1 million, 900,000. If you're looking at some of the new home construction in North Carolina, in Atlanta, where it's like, the downtown epicenter of Atlanta, you're going to see some really expensive deals in Groundfloor. I tend to stay away from those because, again, when this property gets flipped, or if this property is going to turn into a rental, there's less people in the world, less people in the city that can afford that price. So I like to be kind of in the lower range. 675 is not too bad. Like 675 and lower is where I tend to stay. When I see those deals that are in the 300 to 400,000 range, that's my sweet spot, because I know that home can probably be sold really quickly, because that's the average price in America of where people are looking to buy a home nowadays. Once you get over 800, 900, 1.2, 1.3 million, those are the deals that may take a little bit longer. You're still going to get interest on your money, but again, you don't want to be in a situation where something happens, or they're halfway through the project, they run out of funding, they have to foreclose, and now you're not getting your money. So I'm always looking at that ARV and then how much they're actually putting into the deal. Other things I look at, so the loan to value gives it a 4. Quality of the valuation report. Here's another thing that bothers me with Groundfloor. Quality of the valuation report is usually done by an appraiser or sometimes a licensed broker. It typically is always 4 out of 4. It literally, I don't think I've ever seen a deal on Groundfloor where this wasn't 4 out of 4. It's saying, oh, it was done by a licensed professional, it's 4 out of 4. Like, for me, if it's not going to be a differentiator in my due diligence, why even put it? Like, I would literally just take this out of the table. They can provide the information, but it does no value in your analysis of the deal. Skin in the game is 3 out of 10. And again, that's because they're putting in 96,000, taking out a loan of 430,000. Location's another one that's kind of iffy to me, because 9 times out of 10, every deal on Groundfloor is like 4 out of 8. I struggle to remember if I've ever seen one that's 4 out of 8. It's saying, I don't even know what would qualify as an 8 out of 8 if it was like the perfect city and the perfect location, and I've just never seen it. So these two in particular, quality of valuation and locations, really don't add much to your analysis. Borrower experience, 5 out of 5, which is really good. But again, this could be a little bit misleading, because if they've only done 1 or 2 deals and they happen to have good deals their first time up, then you don't know if this is, out of 5 deals or 100 deals. So that's one thing to kind of keep in mind. And then borrower commitment. I don't even read too much into that. So I wish they would put more photos of the inside, outside. They do not. Groundfloor, again, I'm more than happy to always give plenty of feedback on every platform. It would be great to get some inside shots, maybe the backyard, kind of the back of the house. You don't see any of that, and that's kind of where this due diligence comes in, of going to Google, which is what we'll do here in a minute. This talks a little bit about, there will be multiple LROs on this project, each representing subsequent draws. The LROs will range from 136,000 to 216,000. So again, this is why you see up here, when it says number 3, because of this 526 or 430,000 project, it's been split up into multiple LROs, and you can invest in each of those. So that's always a good thing. Loan to position, this is very important. This is a first lien. You always want to look for first liens. These are the ones where Groundfloor is first up to get their money, to recover their money in the event of a foreclosure. Groundfloor has been starting to do things where, in their labs program, where you can invest in second lien positions. Because you're investing in second lien, you're second in line to get your money back. those have a higher risk, but because it's a higher risk, you're going to get more of your you're going to get a higher return. So there's nothing wrong with second liens. You just have to do your due diligence going into those projects, that if it goes bad, you're second in line to get your money, and you may say, I'm fine with that scenario to get a higher return. And then they talk a little bit about Castle and Homes here. The LLC was formed in 2018. It gives a little bit about the properties they've done in the past. So they've done 4 loans funded through Groundfloor. They've completed projects per year, about 2. But again, this is all related to Groundfloor. They may have been in the business 20 years and done 50 deals, and those 48 deals were outside of Groundfloor. So you just don't know kind of a lot of that history by just kind of looking at that. But it's nice that Groundfloor puts that information there that you can look at. So now my big thing that I always like to do is I'm going to put this address in Google, and then we're going to do some searching to kind of see. This is kind of the nice thing, love Google Maps. Shout out to the Google Maps team. They do some amazing work in keeping the entire United States and all around the world up to date with new roads and new changes to the various cities. When you put this in Google, remember, once you paste it in, to kind of remove the number 3. Most of the time, Google will just ignore it, which is good. But no, this is really not part of the address because it's part of the nomenclature used by Groundfloor in terms of the loan. So it's really 1378 Metropolitan Ave, Southeast, and then Atlanta. So let's hop over to the map. All right, so I've hopped into Google Maps. You can see, oh yeah, that looks like the same house. But looking at this house, you can tell, yep, it's been fully renovated. Now, whether I don't think they demolished this house and built from scratch. It just looks like they did a really nice renovation and kept the bones of the house. And so the things I look for, this is where the house is located. You're zooming in, Metropolitan Ave Southeast. I always do a nice zoom out because I want to know, where is this property located in relation to the rest of Atlanta? Okay, so it's on the east side of Atlanta. I've done a number of deals through Groundfloor. Here's the big Mercedes-Benz Stadium where all the the college football games are played, and NFL and all that stuff happens kind of in the epicenter of Atlanta. So you can get some really nice deals where someone's doing a rental, a renovation, a fix and flip. When I see stuff in this area, I tend to jump on it because I know those things are going to move really quickly. This one's on the east side. I'm not too familiar with that much of the Atlanta east side. But one of the things I like to do is I'll go down here, and then this is kind of where I start looking at the street level. So I'm going to click into the map, and this gives us the street level. So you can see older house going back to what's showing in the Groundfloor. And again, I know you're watching this on video, so this is kind of a larger picture of what you can see. They've done a nice job. So this is a project where when this was taken, they're pretty much done with this. And so it's a lower risk investment because you can see the work's kind of already been done. So you can put your money in, $100, $200, and get a quick return from Groundfloor that's going to be higher than just having your money in a savings account. But some of the things that I like to look at is what else is going on, on this street. This looks like a house that's fairly well maintained. That's a good sign. This house, again, older house, but fairly well maintained. That's always a good sign. So then I start to, I want to start circling around. What does the street look like? Are there other houses under construction? Interesting here, it looks like someone blurred out. You can request Google a little tip and trick. You can actually personally request if you don't want your house to show up in Google. I don't see that all too often, but apparently this owner contacted Google to get their house blurred out. Some other homes, you can see these are probably old and have not been renovated. But then I'll go down the block. I'll look to see what else is going on. This is one in particular that doesn't look like there's a whole lot of construction going on. And that's, not a good or bad thing. I will say this one looks fairly new, so that's a good sign, which means what I'm looking for is activity. I don't want to be the only house on the block and there's gentrification happening, and that's a subject of a whole nother video, but you don't want to be in a situation where the investors come in, it's the only new house on the block, and every couple of weeks they're going to their property that's under construction and stuff is getting stolen from the property where they're having to replace. And that's how these deals go really bad really fast, is when it's under construction and there's just a lot of barriers to getting the project complete. This is a nice house. You can tell that this one obviously has been renovated. So obviously there's been some work on this block in past. And so again, that's a really good sign that there is some activity. It looks like a fairly good neighborhood. If you spend enough time on Google Maps like I have, you see a whole bunch of amazing and interesting people when the Google car comes by. So I like that. That's a good sign there from that standpoint. So then the next thing that I will do is I will take, the same address, and I am going to go into the real estate website. I'm going to first go into Redfin. I like Redfin just because of the way the information is laid out and some of the things that they do. You can see this was sold in May 22nd of 23, so less than a year ago. So you get some of that information. You can see it's the same picture. It gives you a little bit more information. It's a 4-bed, 1.5 bath. So we don't know, did the investor put a second bath in this? Have no idea. This is where I think there's a great opportunity for Groundfloor to provide some additional information to give their passive investors additional context. And then it makes you feel good. If you're an investor and you know, like, wow, if they had a second bathroom in this, it would really sell even faster. So those are some of the things you may be able to get some of that from reading what's currently in the house. But the real main reason I go to Redfin is I'm looking at kind of, what has the home estimates been. This is gold here where you say, what are some nearby comparable homes that have been sold in that area? Well, one went for $732, one went for $685. It'll pop up a map here. And so if I scroll down, I can look and I can see, okay, here's the property I'm looking at. There was one few blocks away, A, here's one for C, F, sold for $700,000. So this is gold when, again, I can be on a beach in Costa Rica and, look at this information and see what makes the most sense for me in terms of investing. I don't have to get on a plane or drive to Atlanta to figure out if this is going to be a great deal for me. So let's scroll down. Other things I want to point out for you. They give a lot more details. You can check, some of this against what's in Groundfloor. Sales tax, sale and tax history is provided. Gives you the county. Cost of home ownership, the schools. A lot of these, there was a time where some of this information that was on Redfin was not on Realtor.com. That's the second one I'll take you to here in a second. They're all competing, right? Zillow, Realtor.com, Redfin.com. So pick your favorites. I have my favorites. You may decide that you like using Zillow or Realtor more. But again, you want to just kind of look at some of this due diligence. And all you're doing is looking to say, I'm not just throwing my money to the wind. I'm actually at least looking at some other additional factors before putting in 100. Certainly if you're putting in 1,000, 2,000, 5,000 in a particular deal. Flood factor is minimal. You can tell it's in the middle of Atlanta, so probably the flooding. But again, like if you're familiar with cities like Houston, where it can flood the whole city, even though you're not near the coastline, just because of the drainage and how the topography of the city's laid out, it could still be a problem. But I don't know Atlanta, at least the east side, well enough if that's an issue. Nearby similar homes, again, giving you some more context of what these homes range in. nearby recently sold homes, and then they have some additional things there. So again, I feel really good about the information presented here, where you're seeing kind of that range of homes, the price point, and again, giving back context here of what was the original value. They're saying ARV, they think they can sell this home for $675,000. So that's within the range of like, okay, this doesn't seem to be too far off. Yeah, I feel comfortable investing with Christie's company to do this deal, and I'm going to put $100 in. Now, if Christie had $900,000 as, oh, I think I can get $900,000 for this home when it's done, I may say, I'm looking at Redfin. I don't see anything down here that's suggesting you're going to get $900,000. So that's the level of due diligence. You can go one step further than that, but that's kind of the level that I like to be involved, at least from a ground floor standpoint. Because again, you're diversifying, you should be putting your money in a number of deals. Now, if I was doing this the old fashioned way, where I'm driving to this house, I'm going to put 20% of my own money down. I'm probably going to do, I'm going to get a realtor. I'm going to do a whole nother level of due diligence. But when you're doing, crowdfunding on a website, I feel that's the appropriate level of due diligence, at least me personally, for what needs to be done. I'll quickly go over here to realtor.com. Why is the site slow to load? Well, here it comes. It's coming up. Probably it's waiting for ads to load. They have the exact same picture. Yeah, there we go, Subaru. They have the exact same picture here. They're estimating the home value at $132, and obviously because it's run down, Christie, that particular investor, is obviously going to sell it for much more than that once all the renovations are done. So some things here, very similar. Again, it didn't always used to be like this, but similar homes for sale. So these are not sold, but these are ones that are currently on the market. And you'll see these are slightly less, right? These are 450s, 490s than what we were seeing on Redfin. That's why I like to get different perspectives depending on what site you're on and what you're looking at. This one has, Realtor.com has a slightly better school section, so it gives you the little ratings. 7.4, junior high is not rated that well, and they give you some reviews. But again, if that's something you want to incorporate into your investment strategy of, I only want to look at properties that are next to good schools, have at it. That's something that you're more than free to do. And then we scroll down here. Check out other homes, nearby home values. So they're giving you some nearby home values. There's one there for $627, one for $780. So these are things that you all want to look at when you're thinking about, what's the confidence level I have in investing in this particular deal through Groundfloor. I thought there was a median, but I can't find it right now. But I probably skipped over it. This is always interesting, the median rent. So say the person buying this house, say it's going to be an investor, and they're going to buy this house from Christie here, right? They're going to buy it because Christie's probably is going to sell this. It's going to be a fix and flip for her. So she's going to sell this for $675. What if the investor who's buying it saying, I want to turn it into a rental? Probably the math doesn't work out at that price point, but it's just good to know that if someone is renting a home in this area, they're probably getting $2,200 a month for nearby properties. And it's less expensive than nearby properties at 76%, but again, that's because that's the unrenovated number that they're looking at there when they make that calculation. And that's really it. That's really all I wanted to show you today. Again, a nice level of due diligence. It's really a combination of looking at the area, see what you can find, using, just Google Maps, see what you find on the real estate sites to make sure this is within range. This one's probably within range. I won't click on it right now, but when I'm ready, I'll just click invest now. This is probably a deal. I'd probably put $100 into this deal, or maybe $200 into this deal, and then wait to get my money back again. This is at a 10.5% rate. So again, hopefully this was pretty useful for you if you're thinking about investing in Groundfloor, or at least joining Groundfloor. If you are a silver or gold member, use our link. We have a link in our knowledge base in our library where we have all the platforms that we think you may be interested in. And you can sign up through Groundfloor through our link. I'll also try to put that link in the video. Look for other videos. We may even do a series just when I'm looking at different Groundfloor investments that'll be a little bit shorter than this one, just so you can see how I'm going through that process. But I like this deal. Again, it's not brand new, but frankly, it's a purchase and renovation, but it's almost a new construction, where this one that says new construction is because it's been built from the ground up. It was just bare land. I like the renovations. I like the new construction ones. Again, pay attention to the city and state. You may find that you have better luck with deals in certain cities than others. But that's all the stuff that you can learn as you go slow and learn more about Groundfloor. So please like this video. Please subscribe to the channel. This is, passive income investing in its purest form, being able to just sit anywhere in the world and invest in real estate from the comfort of your beach chair or your lawn chair. And we're really impressed with what Groundfloor has done with this platform and with this offering. Like I said, I attend all the calls that they have. Once you join the platform, you can actually even be a shareholder. You can buy shares in the company. They're not public yet, but you can buy shares in the company through the platform. So all in all, this is one of the ones that we really like, and we hope you do your own research and feel the same. Again, this is Brian, and we'll talk to you soon. Bye-bye.